I've talked about the 3 financial questions that I believe everybody is asking. How much is enough? Will I ever have enough? And will it always be enough? I've covered the first 2 questions in pretty good detail, so today I'm going to start with the will it ever be enough part. And the big question to start off with, how will your investments perform in retirement? Any good financial advisor is going to tell you that past performance is in no way an indication of future performance. That's a disclosure most people have to make. Now, annuities, insurance products, things that are guaranteed like that, they can make promises on returns, but typically those returns don't keep up with inflation, or at least they don't keep up with what you need your money to grow at to meet your investment goals. Okay, so how are your investments going to perform? Nobody knows. You can look at history. I'm going to put this chart on the screen now, and you're going to see something we put together, just some common investment portfolios. So here you have an aggressive portfolio with about 80% stocks, 20% bonds, a moderate portfolio next with 60-40, moderately conservative at 40-60, and then conservative at 20 to 80. Alright, so below on this chart, you're going to see historical returns from 1926 to 2017. These are the average returns. Now, typically, the more risk you take, the higher average return it is, but the more your investments are going to fluctuate. So let's just take a moderate investor, for example. Over that time period, the average return in the portfolio was 8.8%. That's a long data point, many years of coverage, but again, that is simply past performance. So let's talk about future performance. Markets change. We've been in a bull market for a long time, since 2009, and really so much depends on timing of things. When are you going to start withdrawing your money? Is your money going to go down a lot right before you start to need it? Things like that. Another chart I want to show you guys is investment returns by decade. For a 10-year period, how do investments perform? It is ranging all over the place, so I'm going to put that chart here for you. Alright, so if you look down from between the 1930s to the 2000s, we're almost finished with the 2010s, you'll see the different investment returns per decade. In the 40s, about a 14% average per year, so you look at 140% total. In the 50s, about a 48% return total. And then you go down here recently to the 2000s, so that's 2000 through 2009, the average return in an investor's portfolio that had the S&P 500 was actually negative, so about negative 1% per year. That was the average return over that time frame. Alright, so you want to be diligent, you want to be focused on a diversified portfolio, but these retirement projections and will you ever have enough? That's why it's a question that's asked a lot. You don't really know. It's all about how investments are going to perform during that time of your life. Keep an eye out for my next video giving you guys some things to think about for will it always be enough for you.